Good afternoon, everybody. Welcome to this week. And well, what a week it has been. Boy, more volatility in the market, a lot of red, volatility in politics, things getting ripped up, all of that fun stuff. We got a lot of stuff to cover. Absolutely a lot of stuff to cover. That's fantastic. We got the news. We got you guys. We got a little bit of everything going on here today. Right at the top of the show, I will tell you if you want a market close tomorrow, we can certainly do that. The four super thing, we'll get that going. And let's also talk a tiny bit about Blossom. So, for those of you who do not know what Blossom is, that is the social media app that is designed for investors. So, it is a good way to communicate to investors, talk about all kinds of different stocks and things like that. That's what you're going to find over there. I'm over there as one of the ambassadors, so feel free. If you follow my link, you should be able to do it really quickly. Follow me. I'll follow you back, and I can't wait to see what it is you are talking about over there. All right. Now, this is we're almost running out of summer. So autumn is coming here pretty soon. I don't know about you guys. I love autumn. That's my favorite time of the year. So now, of course, a lot of people say it's because your birthday is in September, isn't it? So my birthday, by the way, next Friday. That's also the day that I'm going to drop a deep dive. That was it is a subscriber sponsored video. So we started that last week. Funny Books has commissioned me to do a deep dive on HBA. So those of you who do not know who HBA is, well, they're a Bitcoin miner. So Hut 8. So looking forward to doing that. That's a fantastic one to start off because I can look at, are you guys not hearing me or something? Uh-oh. Okay. I have now come officially full circle. I have done a full high rye. So those of you who were around back in the high rye days, he was a financial streamer and he managed to go about 20 minutes. He went 20 minutes into a stream on mute and talked away a ton. I just talked away a ton too, but at least you guys caught me right away. I only went 3 minutes. With it on mute. Oh, it's the angle I have the microphone. Normally I have it there. Normally I have it about that angle where I can see the red light. I had it tilted down a little more so I couldn't see that the mute button was flashing on it. So, whoops. Okay. Oh boy. Anyway, I guess I don't think there's anything that we really need to say over again, but I'll just sort of give you guys the Cole's Notes version of the 3 minutes that I was talking while you guys were listening to silence, the sound of silence. I guess I finally understand that song. I think. Um, Basically, I said I talked about Blossom. What Blossom is, link down below if you want to check it out. It is really, really cool. And I talked about next Friday being my birthday. So one of the best ways I know to kick off the fall as we move towards autumn, and that's going to be good. I can't wait. The other thing I mentioned is next Friday is also our first subscriber sponsored, or I don't want to say sponsored, let's say commissioned, subscriber commissioned video. Yeah, we're going to, Funny Books wants me to do HBA. So those of you who do not know what HBA is, well, they're a Bitcoin miner, Hut 8. So that's going to be cool. We're going to get to talk about the state of miners, talk a little bit about the halvening, talk about Bitcoin in general. So that's going to be, well, if I want to coin somebody, this is going to be a good one. So I can't wait for that one. I can't wait. All right. Oh boy. Yeah, let's hit the chat. Let's hit the chat right away because I'll tell you. I have been talking for a while, most of it to the air, but hey, why not? John Doe is in the house with a hi. Oh, hi, Candace. Hello, John. John, thank you for the super thanks I got from you on Saturday. Loved it, loved it, loved it, loved it. Um, Stan says, hello, all. Sammer says, hi, guys. Oh, right. I just mentioned that John sent a super thanks. I did also say in those 3 minutes. Now, any of you who happen to be able to read lips, are probably wondering what the muss is all about. But I did say as well that if you want a market close tomorrow, I'm game for it. For supers, we do it simple as that. Get the whole show to decide. All right, let's see here. Prairie says, afternoon banana bread brigade. Prairie's in the house. Good to see you, Prairie. Good to see you. It's always nice on the weekend because I know that you can actually listen and participate because you don't have to work. So that's not too shabby. And we got the mod, Mr. JJ, in the house with an afternoon, everyone, early squad. Terry's in the house with hi, you bunch. There we go. Let's see. JJ says, y'all better behave in the chat. I will tell you, this is a testament to this community, a testament. This is why you guys all rock so much. I have never had an issue with anyone in chat. The only issue I ever had is early in the life of the channel and this was before this week, back when we had Saturday night live stream. I would occasionally get one of them weird bots that would come in and start talking about Russian girls or something. And I delete those guys right away. And people in chat would let me know, yeah, you got to delete that one, Candace. And I'm in there fast. But since then, honestly, I don't know if it's YouTube doing a good job or if, the really bad trolls are just not interested in me. Oh, well. But no, it has been fantastic. You guys have been great. Let's see. JJ says autumn is my favorite season, then winter, only because I get to go snowboarding with my fellow board heads. Oh, I'm not going to go snowboarding for the 5,000th video, by the way, just in case that gives anybody ideas. However, no, I've always loved autumn. I mean, it does start with my birthday, but that's not the reason that I love autumn. I've always loved just watching, like, for one, I love the leaves. Halloween, I love Halloween. It's a great, great holiday. And of course, I also love Christmas. That was a very happy time in my childhood. So every time this time of year rolls around, I'm in my element. I'm in my element from about here to the end of the year. And then comes January. Oh dear. Does anybody actually like January? That's a question I have. Maybe JJ might like it because of snow, but how many of you guys are a huge fan of January? I'm personally not my favorite month. All right. Mario says, good afternoon, everyone. All right. And I'm going to jump past all of the sound things because we get that all fixed. That's all fixed. Let's see. Audio was fine. Now it's bad. Really? Is something going on still with the sound? I don't know. I'm hoping you guys can still hear me. I don't know. Yeah, no, it still looks good. Let's see, that's better. Houston, we have a problem. Let's see. Okay, now it's fine. All good again. Okay. Let's see. Ian says my audio was clipping out. Might have been something on my end. Then you made it worse. Now it's good. I hope so. I hope so. All right. Let's hope there's no more sound issues going forward. But if there is, let me know. Jordan says, hiya there, Candace. Hope you're well. Let's see. There's always something technically challenging. I know. What can you do? Jay is in the house with a hi, everyone. We got Jersey beef. Hello. It's a beautiful 27-degree day in Saskatchewan. Oh, nice. It's not 27 degrees here. It's chilly. I don't even think it's probably, I don't know. Actually, I don't know what the temperature is. I would guess about 15 from the way I'm looking outside. It's like windy a little bit and skies overcast. So let's see. Yeah, there we go. It's probably lower than 15 then, because I'm a hop, skip, and a jump from Montreal. So in Montreal, it was hella freezing today, only 10 degrees. Oh boy, yeah, yikes. And we got Mary in the house. So everybody, Mary loves it when you guys hit the like button. So I'm gonna take a sip of coffee. While I do that, you guys take a good old hit on that like button, or maybe you all did it while I was muted at the beginning of the stream. So good. Yeah, and that's exactly what I'm seeing, JJ. So windy and gray skies. And let's see. So, Prairie, are you passive prairie investor in the Adriano Discord server? I guess not. I guess not. Let's see, someone else with the same name. It happens. It happens. See, Bismarcky, what's wrong with Russian girls? um, nothing really, to be honest. But when you got a bot in here that's sort of promoting, hey, we get hot Russian girls, yeah, kind of, this is not the appropriate place for that. Let's just say. Jordan, I can appreciate January. It's not all that horrible. It's probably not my least favorite month. I think part of it, in my case, is that because I love from September to December, January is always that letdown because it's like, I got to go through another whole year to get to September again. So there's a little bit of that, but at the same time, I mean, I'm pretty, even if it's a month I'm not crazy about, that's fine. I don't mind. I mean, I adapt. Bismarcky beats the system. I just usually go somewhere warm. There we go. And Ian, same thing. I normally flee the country January 1st. Mark is saying, sound is awesome. Awesome. I like that. Lisa's in the house. Good afternoon, everyone. Let's see. JJ saying, make sure y'all bold that like button. Yeah, absolutely. Let's get it red. Let's get some people in here. Maybe we can even break a record today. Who knows? I don't know. I would like to. Roku, sorry. Put him back up. Roku from Stittsville is here. Afternoon. Good day for chili for dinner. Yeah, absolutely. So Roku, Stittsville, if you guys don't know geography, is actually on the outskirts of Ottawa. So, Roku was experiencing the same thing that both myself and JJ are experiencing. Terry says, those Russian dolls are so into themselves. Perhaps. Bismarcky, I think February is the worst month. Well, and this is a good argument. I'm in the same camp. I actually dislike February a little more than January, only because February is that month where you feel like winter's about to let you go into spring, but it just doesn't let go. Even if it gives you signs that it's going to let go, especially at the end of February, and it still pulls you back in. It's kind of that month, which is kind of odd because it is a shorter month. But yeah, I would say February is probably my least favorite month, followed by January. January would be my second least favorite month. Then I don't care about the rest of the months until I get to March. Yeah, March is not that great either, to be honest, but it is fun. March is fun just to see if we're going to get that early spring. Also, you get St. Patrick's Day. That can sometimes be fun. Perhaps not so much for somebody who doesn't drink, but it can still be fun. Jersky says, anyone else pick up a bunch of YNVD this past week? Yeah, I mean, we got a good correction going on Nvidia, and I'm still convinced it's going to turn itself around. It may take the rest of this year to do that. Might even be early 2025, but let's take a look and see what happens. I think this month's going to be difficult. I think this one is going to be difficult for sure. All right. JJ says, heading to my volleyball AA league later this evening. My legs are still cramping a little bit from a full day volleyball tournament yesterday. Oh boy. Yeah, I was never great at volleyball. But I was more of a brain than sporty, so it probably makes sense. Jay says, I'm transferring my RBC stock to Wealthsimple. I didn't have to withdraw my TFSA stocks. I'm getting tired of RBC fees. Yeah, it's absolutely not something I would like personally. I don't like to pay fees, so I think that's a good move. Definitely think that's a good move. JJ says, why you hating January, Candace? It's just fine as it is. And keep in mind, it's hate's a strong word. Like, I don't really like, if you really boil it down, I don't hate any month in particular. And I mean, it depends. I know when I was a kid, I was okay with January, other than going back to school, because I used to love like skating and stuff like that. So that used to be a lot of fun, and you could do that in the winter. Of course, of course, some of the skating I used to do as a kid, you can't. I would never even dare to do now. One of the things we used to do as a kid is we had this big lake. It was called Kearney Lake. And one end was great, but at another end, a river came out of it, so it kind of had a little opening on the end. But we used to go to the back end of the lake with garbage bags, because the wind used to go straight down that lake, and we would hoist the garbage bags in the air, and it would get filled with air, and we would be going down there faster than the cars on the side of the road. Like, we were just flying. And about halfway down the lake, you'd have to let go at least part or one of you off a part of your bag, because you need to start thinking about slowing down. Boy, I don't know what it is, but Gen X kids absolutely did things that I don't think any future generations could do, because of just how dangerous they were. But it was fun. It was a lot of fun, though, at the same time. Vic Vin says, I like how everyone is down on crypto. Crypto's always been that way, though. I find that a lot of people who invest in crypto don't understand it fully, and don't quite understand the volatility. So I see, and this is where a lot of people lose money. So many people give into FOMO and FUD when they're dealing with crypto because of it moving so much. I've seen that a lot. Where people are like, when it's, heading towards all-time highs, they're all buying like crazy, saying, oh my God, look at this. This is great. And then, of course, you get your sell-off at the all-time high, and the price plummets. And those same people who are buying like crazy on the way up are selling like crazy on the way down and taking losses, because they're like, oh my God, it really is a scam. It's going to zero. We got to get out. It's horrible that it's that way, but it is. And I think the smart people are those people who are causing some of the issues. So, for example, when it's heading towards an all-time high, you probably should be selling when it gets up there, because it's going to come back down, because there's going to be a lot of the whales do some selling right up there at the top, take a bunch of profits. They watch as it starts crashing. They watch as all of the retail investors who are panicking cause it to crash further. And then they scoop back in and they buy all these cheaper Bitcoin. and then they just wait and they do it again, rinse and repeat. So it's one of those things that I think as we get as Bitcoin becomes more, I guess, mainstream, this is going to take care of itself a little bit. When I say take care of itself, I'm thinking just that as more and more people get in it, it makes it a little bit harder for, a small group of institutional investors to cause that initial tank. So it helps reduce that volatility a little bit. And that will definitely be a good thing. That'll definitely be a good thing. All right. Yeah, hot. We're going to be talking about hot actually. And this is great. We're going to talk about hot 8 on Friday because that's going to be the big Friday video. The one that Funny Books has commissioned the channel to do. All right. Vineet is in the house with a hey all. Let's see. It's 1W here. I love it. 12. Oh, is it 12? Okay. So it's a little bit warmer here. 12 opposed to 10, but it's chilly. It's chilly. The only room right now in the house that's even remotely warm is the studio because of the lights and the computers and the monitors. And I love that. I love that. When I leave the room, I have to get ready for a chill. I might even have to throw on a hoodie tonight. I don't know. We're definitely not going to turn the heat on anytime soon. Usually, I think usually October, maybe if it gets really cold, but not anytime soon. JJ says optimal temperature for me is between 5 and 18 degrees. Okay, you'd love it in here then. You'd love it. That's for sure. Larry says, Hut 8 has been a wonderful moneymaker. Only people that lost were the hodlers who keep stocks that go up 500 to 1,000% in 3 months. Yeah, I mean, that's the thing. There was a lot of money to be made with Hut 8. I was actually swing trading Hut 8 for a while before they they did a reverse stock split. And when they did that, their price went up. And I was just like, they're outside of that zone of what I wanted to trade because I didn't want to trade with with roughly not even half of what I'd been trading before with them. So I stopped swing trading with Hut 8, but for the longest time they were a favorite for me. Akada says I also quit RPC. Wealthsimple has been great so far. Yeah. If any of you are paying commissions, you really just want to look at your options and see whether or not that's something you want to do. Personally, I'm not paying commissions. There's no way. So right now, as far as I'm concerned, the two best options for you to not pay commissions, if you want to stay with the big six, you got National Bank, or there's Wealthsimple. Wealthsimple is a great option. So, and here's the thing. If you want to try Wealthsimple out, right now, down below, there's like a little link down there. It's an affiliate link to Wealthsimple. And what they do is if you sign up, you throw some money in there and get yourself set up, they'll give you a bonus $25 for signing up. They give me $25 too. So I just want to be fully transparent about that, but definitely use that link or somebody else's link. I don't care whose link you use because I just want to see that you get that bonus. So if you are going to try them out, make sure you're using somebody's link so you get that $25. Otherwise you don't have it. And here's the beautiful thing. If you try them out and you hate them, you can always leave. You still get to keep that $25. So it's not, it's pretty much free cash. I love free cash. Free cash is the best type of cash. Larry says, let's see, bought Hut between 97 and $1.20. So that was at 180 million market cap, 750 million in assets. Sold at 430. Rebought on the reverse split. That reverse split. Just did it again, 9 to 16 now. Bought at 840 on Friday. Yeah, and here's the thing. I do feel like, this all started off with Vic Vin talking about people being down on Bitcoin. I think things are brewing with Bitcoin. I really think I don't know when it's going to start. Maybe it'll start September, but definitely I think it'll start by October. I think we've got some really serious movement coming. And as I mentioned, I think it was on one of the market closes, my goal for the end of this bull season for crypto, my goal for Bitcoin is between 100 and 120K. That's where I'm thinking. I know there's people out there thinking it's going to go to the moon, much higher than that. And I hope they're right. I wish they were right. But my gut says between 100 and 120, and that will when will we hit that number? It's possible by the end of the year or early 2020 25. And then I think at that point we'll go into Bitcoin will be done its run. So there will be some retracement at that point. So just what I'm kind of seeing when it comes to Bitcoin. Mary says, let's see, quit TD, went with Wealthsimple. Yeah, absolutely. I think that's a fantastic way to go. JJ, I do most of my investing on mobile, so Wealthsimple is my absolute favorite. Will be transferring in kind most of my USD holdings at Questrade to Wealthsimple since Questrade's mobile app is crap. Okay, I've never used Questrade's mobile app, so I can't have an opinion, but JJ doesn't like it. And I do trust JJ, so we'll go with that. Yesterday says that it's 26 here in Saskatchewan today. So that's kind of funny. Yesterday he's talking about today. Anyway, yeah. Yeah, there's actually it's kind of interesting. Normally you take the West, you take Calgary. Calgary almost traditionally gets gets snow sometimes in September, but this year they're baking in the heat as well as the prairies. So Saskatchewan, I think Manitoba is probably fine. It's the way the jet stream is currently looped up. So it's looped up to get some heat up in there. Then it goes back down so that this side of the country, we're not experiencing the heat. Not that yet. We are going to get a reverse. It's going to get chilly in the West by towards the end of this week coming up. And boy, we've just turned into a weather channel. But it's going to be warm here. It'll be warm on my birthday. So we'll go with that. Let's see. Sammer says, volatility is a kind of natural thing in crypto, as I'm in crypto for about 7 years. So no panic. And if gambling, make sure you know how to play. There we go. Prairie says, I suffer from reverse FOMO. I sell nothing and too often hold out for a position to go down more than I miss my opportunity to buy in. Okay, fair enough. Fair enough. Yeah, I mean, I always say this. There's two different types of traders. You've got, you have your long-term traders. If you're a long-term traders, you really don't need to be worrying too much about, all of these ups and downs that are happening, on shorter terms. You don't need to. Other than if if you got some extra cash and you want to throw it into one of your favorite stocks and that stock happens to be down, that's a great time. That's buying the dip. Nothing wrong with that at all. Now, if you're a short-term trader, that's where things get a little bit different, because that's where you really want to be. Like when I talk about people selling at the top. So when Bitcoin hits its all-time high, people who are selling like whales. A whale, by the way, in case anybody hasn't heard this, a whale is just somebody who owns like a whole crap load of Bitcoin. There's a whole bunch of different words depending on how much Bitcoin you have. I can't remember exactly how much a whale has to have, but I think if you own like one Bitcoin, you're like a shrimp or something, and it goes to different larger aquatic animals as you get more and more. So, or is it a crab? I don't know. It could be a crab. It could be a crab at one. But there's a whole bunch. So when people talk about a whale, it means somebody who owns a lot of it. And that makes sense because, if you own a lot and the price is going to tank and that people are about to panic, then selling at that top is not a bad idea because, that price is going down. And as soon as you start reinforcing that feeling with the retail panic, they panic more and they sell more. And then you just sit down at the bottom and you just wait, and then you start gobbling it all up and it goes back up. And what you end up having is, let's say you had let's say you had 1,000 Bitcoin at the top, you sell it all, you wait for that crash to go down, and then you might be buying like, maybe you're buying 1,100 at the bottom if it goes far enough. It really just boils down to it's a way to basically turn what you have into more. And then when it gets back up there again, if you think about it cash wise, you've created a whole bunch of extra cash out of that whole process. JJ says, not a big fan of crypto besides BTCC. Just not my cup of tea. Index ETFs are much more preferred for the most part. Yeah. And that's the other side. Even though we were just mentioning crypto, and you don't have to be, you don't have to be a fan of crypto. You can be absolutely fine, and you can be very, very profitable without having any exposure to crypto. And that also goes with any sector. Let's say, for example, you're like, I just do not like that financial sector. I want nothing to do with it. Fine. You don't have to invest in banks. You can have a really good, well-diversified folder, minus one sector, and that's perfectly fine. Although, if you've got ETFs in there, you'll probably find, especially if they're Canadian ETFs, they're probably going to have some amount of exposure to that financial sector. So you may have a little more than you think in that case. Now with Bitcoin, there is the stock side. Like, we have, like in Canada, we've had spot Bitcoin ETFs for a long time. So that's always something just to sort of think about. All right, Vineet. Let's see. Wealthsimple still makes money from us on our trades. Any broker. I mean, brokers do make money from trades. There's a couple of ways they do it. Part of it is depending on when you look at the bid-ask spread on there. Sometimes there's a little bit of money in that's going out that the broker is actually making. In addition, when the market's like right now, when we've had some super red days, Wealthsimple's buying. They may be a broker, but behind the scenes, they're buying like crazy. Because here's the thing. They're going to be, they hold a ton of stocks that are under their own name, but those are stocks that they're going to sell when you buy. So, let's say, for example, we'll go with my favorite company, Banana Bread Co. So let's say Banana Bread Co. is at $20 normally. It's usually around $20 a share. We have a big crash. It goes down to $15. Wealthsimple buys a whole bunch at $15. Then the market recovers and you're starting to buy Banana Bread Co. again at $20. Well, Wealthsimple is happily selling them to you. But guess what? They're not paying $20 for them because they bought a whole bunch when the market was down at $15. So instantly, every share you're buying, they're making $5. And they all do this, by the way. This is not something that only Wealthsimple does. They all do this. It makes sense. It's a good business model. It's one of the, it can be a way. Like, for example, when when we had this big giant crash in March of 2020, thanks to the pandemic, I can guarantee you, the brokers were buying like crazy. They were buying up as much as they could. So yeah, and that makes sense though. And just think, that was just a small little dip, right? And how many of us are saying, oh my God, if only I could have bought a bunch of stocks during that dip? Well, that's what they did. And that's one of the ways they make money. They also make money, as Vineet's kind of hinting at, because of the bid-ask spread. There is money they make in that as well. There are different services that they offer. They make money on that as well, but they all do it. They all do it. So I look at it this way. Do you want, that they're going to make money off of you that way? That's fine. That's just the way the business works. But do you want to also pay commissions on top of that? So that's a question that you have to ask yourself. If yes, then hey, most of the big six are ready to take your money. They're ready to take as much as you can. Now, I will point out though, I will say one thing. If you are a long-term investor and you've got a big six bank and you're not making a lot of small trades, you're just making, every so often you make a big investment, then those commissions are probably not bugging you that much. because that's the thing. With commissions, you almost shouldn't be doing a whole bunch of smaller trades just because those commissions will get you. They will eat you up. So just something to keep in mind. All right. Whew, I think I'm falling far behind here. Let's try to get caught up a little bit. Jay says, I also found out IBKR and Questrade are great if you decide to live outside of Canada. Oh, interesting. Interesting. All right, let's go here. Prairie says, I have only ever used Wealthsimple and have nothing negative to say about it, but in fairness, have nothing to compare it with. Makes sense. Yeah, absolutely. Let's see. Questrade is pretty awesome for expatriates. That makes sense. Jersky says, I'm harvesting oats beside a lake today. Interesting. That is it. I've never actually witnessed oats being harvested, but that sounds kind of cool. That sounds cool. Lisa says, if you're in for the long term, doesn't that make you an investor rather than a trader? Yeah, absolutely. That's the big difference. Investing tends to be a long term. If you're somebody who does a lot of short trades, so that's swing trading or day trading, then you're technically a trader. You can be both. Keep in mind, you can have money set aside for trading, and then you can hopefully the core of your money is going into investing, so that way you're growing your wealth. But there are both. Now, keep in mind too, some people probably shouldn't be traders because they don't have the discipline to keep their emotions in check. Because if you've got loose emotions, you may not make a great trader. That's just honest opinion there. Terry says, let's see. No, I wasn't being disrespectful to Russian women. I meant Russian dolls, the children's toy with a doll inside of a doll inside of a doll. Oh, that's funny. That is funny. I was watching a video yesterday on YouTube. It was actually Neil deGrasse Tyson. I was watching Star Talk, and he had Russian dolls in the background, and he actually pulled one out. But it was each Russian doll on the front of it had a different Russian space stations going all the way back. As it got smaller, it got all the way back to Mir. So, or sorry, Mir, at the Sputnik, went all the way back to Sputnik. So I thought that was kind of funny. Yeah, once again, we're going to talk a little bit about Vic Vin. Going to talk a little bit about Hut, of course, in that video. So I cannot wait. 9 says, I don't trust Moo brokerage right now. I've never trusted Moo. And here's a funny thing. Moo they have been reaching out to me like crazy. They're like, come on, we want to sponsor a video. And, I'm just like, nope. I don't want your affiliate link. I'm not putting it up there. I will not send anybody to Moo. As I said, I've got affiliate links down below, but I'm only going to put ones in there that I'm sending you to something that I believe in. So Wealthsimple, I got ShakePay down there as well. So those are both great. ShakePay is a great way if you want to, if you want an on board for crypto. So it's fantastic, especially if you get into other stuff and you want to just sort of buy your crypto there and then move it over to another exchange or something. That's perfectly fine. But yeah, I just can't trust Moo. So yeah, they're one of the ones I've turned down, and I turned down a lot of stuff. Like I get a lot of crazy stuff in my mail. But the funny thing is even though I keep, saying no to Moo, they keep on asking again and again. And it's funny. I've seen a lot of YouTubers, Canadian YouTubers, all of a sudden promoting Moo. And I'm like, nope, I'm not giving in. I don't care. I could come on here and I could tell you guys, oh, Moo is fantastic. And I could spin a tale for you. I would never do that because, I like to be honest with you guys. So yeah, no, not going to do it. Not going to make any commercials about Moo. Not going to put anything up about Moo. It's yeah, they can move along. That's the way I look at it. So no moo. All right. And Vicvin is showing us some of the other miners. So we got BitF, Riot, Mara. Yeah, people are recommending to sell now when all of these mining stocks are down 40 to 50%. Yeah, I mean, that's the thing. Right now, if I had a bunch of stock in any of these, they're down big time. But knowing what I know about Bitcoin and what I really think is going to happen, there's no way I would jump out and take a loss. So definitely wouldn't. For foreign currency exchange, oh yes, that's always fun. All right, Larry says, my no is war stocks. It's hard, though, to turn down flip since I have a fiduciary responsibility now. So I put it in the contract. Turn down Palantir at 7, knowing it was worth 24 since they're bad. Yeah, and I had, interestingly enough, a while back, I think it was about a year ago, one of the stocks that somebody threw in the pool turned out to be an ammunition maker. I can't remember what the name of the company was now. I didn't realize it. I put it up for the vote. They did not win the vote, but then I got a comment saying, "Oh my God, why is that there?" And and at that point, I looked into the company because I hadn't had a chance yet. And I looked, I'm like, oh, yeah, this is kind of a controversial one. So they didn't come back for the next week because normally you get 3 weeks of, to be in the vote. And no, I was just like, nope, nope, nope. I don't want anything like that in, to, and the funny thing is, I mean, you can make a lot of money off of some of those stocks, but you have to sort of you have to decide, ethically if you want to. I'm never going, and this is the way I am. If you want to go out and do it, I'm okay with it. I'm never going to look at somebody and say, "Oh, you invested in that company. Do you know that they, that they're involved in making munition shells or something like that?" I'm going to leave it. I'll leave well enough alone. But, I will make my choices for, my own ethics. So I will look at it that way. Um, I just figure everybody needs to be responsible to their own ethics. And I have no business. I have no business deciding what anybody else's ethics should be, or if they're wrong, or anything like that. So I just leave it. I leave it alone. All right. Let's see. Oh, I want one of those. Let's see. Vic says here, welcome, Vic. It is good to see you. All right. Prairie says, yes, Wealthsimple may make a profit on each trade, but if I get shares at my desired cost, I do not see it as Wealthsimple making money off of me. Yeah, that's the thing. You know what you're getting into. And I sometimes hear people say, and this also happens. So this will also happen with ETFs and of some of the fees. So I've heard people who have loved an ETF. They're like, I love the dividends I'm getting. I love the growth with this ETF. It's perfect. And then they find out it's got like a 0.1% or a 10% fee or something crazy. It's got a high fee, let's say 2%. And they're like, oh, I can't like this ETF anymore. It's got that big fee. And I'm like, well, you're still making the same dividend that you loved before you found out what the fee was. You're still getting the same growth that you loved before you found out what the fee is. But, and I look at it this way. I mean, this is how I look at it. If I like what they're giving me, I don't care what the fee is. I do understand that a company that's going to manage an ETF, they need to get paid. Their employees need to get paid. I mean, they're providing a service to us as investors. The only time fee will come in is if there's 2 ETFs with the same, providing the exact same service to me, the same exposure, and the same returns, and one of them charges a little bit more, then I'll probably, in that case, I would go with the one that charges a little less. But I look at it this way. If you're going into it and you're happy with the results, why are you going to be upset because they're charging a little bit for those results? It doesn't diminish the results that you're getting. All right. Some John Doe says, what EM countries are you bullish on in the long run? So emerging countries. Um, it's always hard for me to be honestly. It's always hard to know exactly which countries are going to be great. So for that reason, I would stick with an ETF. So you take an all equity. So whether it be XEQT or VEQT, I think there's also a ZEQT as well. You're going to be fine. It's going to hit all of these emerging markets, and I think those will be fine. Now, right now, when it comes to outside of Canada and the United States, my one of my big bets right now is India. I think India is going to be fantastic. There's a few others as well. I think uh, I was going to say South Korea, but it's kind of one of those things where it really depends on the politics. I think at that level. So I um I would honestly, if I had to give an opinion outside of India, I think India is strong. I would say stick with something like an XEQT. Stick with an all equity ETF. I think you can't go wrong that way. Mumu kind of feels like FTX to me. I hope I'm wrong. Um, Mumu rubs me the wrong way too. I don't know if it rubs me an FTX way, but I just I've got nothing. I got nothing that even remotely makes me interested in them. So could they be like FTX? Yeah, they could. Could they be a scam? Sure. Could they turn out to be a really fantastic company that I probably should have jumped on? Yeah, maybe, but I don't think they're going to be. Vic says, thinking of you a lot. 1042, September 13th. Cryptic, but I figured it out. Okay. Okay. There we go. Vic, you're a smart cookie, so I have no doubt. Mary says, thank you for your integrity. Oh, no, you're welcome. You're welcome. I have not yet taken a sponsorship, and I've turned down, well, I haven't turned down every sponsorship. I've turned down every one but one. The one I didn't turn down, I gave them the price that I was willing to that I was going to charge. They never called back. So I'm pretty sure that it was a little bit. I think they thought that because my channel's a little bit smaller, they could get me for next to nothing. And I'm like, well, no, if you want me to produce and make a video exclusively for you, I'm not doing it for peanuts, especially if you have the right to take that video as well and use it however you want to. So no, that's not happening. I look at it this way. You know, the amount of work that would go into just making it, what they wanted what they wanted to pay me was very, very low. So I look at it that way. I look at it that way. All right. Vic Vin says, Mumu and Timu commercials are all I see on YouTube. Remember the government internet bill was supposed to support Canadian content, not Chinese commercials. That bill, even though it has passed, the CRTC has not yet implemented what they're doing with it. I believe that's going to be a 2025 thing when that actually comes into effect. But right now, nope, it's not. It's not being implemented. All right. Jay says, anybody look into FFIE? It seems to be a meme stock right now. FFIE. All right. We'll have to take a look at that after we get through the news. We have not even started the news yet. And we're, 50 minutes in? Yeah. Oh, well, we'll get to the news here in a moment. Jay said, I bought EMA, ZDV, ZDB, RBNK, HDIF this week. Doing a good bit of shopping. There's nothing wrong with getting some good deals in there while the markets are hurting. All right. Vic Vin says, hey, Larry, how can you say Palantir is bad when they literally prevent terrorism and help the fight against Russia? All right. Well, let's see. They stopped countless terrorist attacks that don't get reported. Don't be influenced by the media to stop you from making money on a stock because morals. When it's, yeah, but even still, I mean, I see both sides. I'm going to say, put this right here. I see both sides of this. And once again, I think personal morals, whether or not you can justify an exception to a moral, to your own morals, um, you know, it doesn't mean that other people have to use the same exception. So I always look at it that way. So yeah, understandable, both sides. Um, yeah, same. So some John Doe once again says same here. India, I am liking India. Well, India, India's almost a no-brainer. It's kind of set up and kind of running in such a way that it would be hard. It would be hard to not make money with India. All right. Vineet says, all right, let's pull a few of these comments up. Simple and others are institutions. No, if what you're saying is true, it would drive the price up. No, um, drive the price up. What of the stocks? I'm not sure exactly what you're asking, Vineet. Other than, yeah, they're institutions. They're definitely in it to make their own, to make money and make a profit, of course. And keep in mind, like right now, they're not publicly traded. So the closest you can get to investing in Wealthsimple is through their investors. So their biggest investor is Power Corporation of Canada. So POW, they own the majority of shares of Wealthsimple. So you can definitely invest that way. But no, I mean, it's the thing is when they buy a whole bunch of stocks, if you're talking about is that going to impact that price? Well, probably a little bit. I mean, it's still the same thing, right? It's still stocks being bought. So that will certainly impact it as well. But keep in mind that technically, when you then buy that stock from them at a cheaper price, until they replenish that stock, it's not technically driving the price up on the market per se. So it's kind of an interesting way. It depends on their stockpile. Now, most times, if they are maintaining, like if they, let's say, for example, we'll say Microsoft. So let's say they have to maintain because one, they have to maintain so that they can do fractional. So they need to have stock on hand for that. So let's say the minimum number of stocks of Microsoft that they have to have is 1 million. I'm picking this number out of my butt. So don't quote me on this. I'm just pulling it out of my butt for the example. So if Vineet comes along and buys 1,000 of Microsoft and they only had 1 million, and that's the number they like to keep at, well, then they no longer have 1 million. They have 999,000 of the stock. So they're going to have to buy that 1,000 right away. They'll probably buy it right away. But what will happen is when Microsoft has a day where they, absolutely tank, well, they're going to buy extra. So that million might turn out to be 1,010,000, we'll say, because they were able to get 10,000 shares at a cheap price. Then Vineet buys another 1,000. That takes them from 1,010,000 down to 1,009,000. They don't have to replenish. If the price is high on Microsoft, they can just sit and wait. But if they start to get to, like I said, if they start to go below a level that they need to maintain so that they can do fractional shares and all of that, they're going to buy. But they will definitely stock up when times are rough at the same time. All right. Vicven says, it's going to be like NVIDIA. Here I go again, NVIDIA. It's NVIDIA. It's going to be like NVIDIA, a company that all the large S&P 500 companies need in order to compete in the future. So buy Palantir and sleep well at night because they're protecting you. Nurad, okay. All right. JJ says, newbie investors sometimes focus too much on fears. As long as the total performance and dividends you get are satisfactory, why the banana bread care? Live your life outside the spreadsheet. Life is too short when focusing solely on numbers. I don't know. I kind of like the spreadsheet, but yeah, no, he makes a point. He does make a point. Let's see. But would you make a video for banana bread? Oh, well, if they had said, we'll bring a truckload of banana bread, that might have been a done deal. It might have been. Yeah, focusing too much on fees. 9 says, I don't mind higher fees, but I love low fees too. Yeah. Yes, of the stock. Okay. Um, Amen 9. All right. All right. Here's Larry's response. Palantir overthrows governments and spread lies. Iraq, COVID, German selections. So there we go. We have two stances. We have two stances. So let's take this offline for now, because there's no need to go back and forth on this one. I respect both of your opinions. We'll leave it at that. JJ says, just buy what you like. Higher fees aren't always a bad thing. Total performance is key. Yeah, that's the whole thing. And that's all about the total returns, right? If you're happy with the total returns, who cares what the fees are? Who cares? Sure, it's nicer to have lower fees, but sometimes you have to spend a tiny bit of money to make even more money. So remember that. Vineet says, generally when institutions buy, it'll show a huge candle on TV charts. Yes, but you got to keep in mind, these institutionals, they're buying in much larger chunks than what Wealthsimple would be buying in. So for example, if you have an institutional investor, they're putting, they're throwing money amounts of a crazy volume at things. Like if they have a sure bet, if they have something they're really, 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 let's say, confident that it's going to go up and they want to get in on it, they're not buying the amount that Wealthsimple would be buying to replenish their store of whatever that share is. They're going to buy crazy amounts. So they might buy, and in some cases it depends on what the price of the stock is, but they might buy 1 million shares, and that, of course, yeah, that's going to cause some spikes. Absolutely. There's nothing wrong with that. All right. JJ says that only happens on low volumes and low liquidity. Otherwise, there's minimal price fluctuation because of huge orders. Yeah, and it also depends too on that volume, how many outstanding shares they have. Because as I mentioned before, if you take a small company that has a pretty much a minimal volume, you could go in there with like $100,000 and you could cause that price to absolutely explode. Now you might that's probably not a good idea because might be difficult to get your money back out, but you could do that. Jay says, let's see, Fifi used to be $107,040 per share in 2021. Now it's $4.80 per share. That's kind of crazy. Are you saying it used to be 107,000? Wow. Yeah, I've not really looked into FFIE, so Fifi, but that's kind of interesting. And now I kind of want to look at it. I do want to look at it. JJ says, I swear mispronouncing NVIDIA is going to become a huge pet peeve of mine. I'll catch on eventually. I will get it right. I'm now at the point that I say it wrong and then I know instantly I said it wrong. So I'm moving in the right direction. Once I've said NVIDIA like that for 30 days straight, I'll be good. That's how long it takes to make a habit. All right. JJ says, considering that fees are already factored in total performance, I'll take my picks. Thank you. There we go. All right. JJ says, sorry, Jackie says, all right, here we go. Yeah. Here's the thing when it comes to, it's funny. I've never had an argument in the comments before, but we do have a little bit of one there. And I will just say this. Right now, I'm not going to bring up any of it. And JJ, if you don't mind, just start deleting anything from that. I just don't. I want to try to keep things friendly here, and not have a conversation get a bit too out of place. Initially, you guys both made your good points, fantastic. But then at that point, just you got to kind of have to drop it. You have to drop it. All right, 9. Let's get down here. Oh, here we go. 9 says covered call ETFs fees are worth it for me. Saves me time. Let the fund managers write the options. Yeah, yeah, exactly. That's an exact thing that's an exact. Sorry, I was reading the next comment. Yeah, no, that to me, that's the exact perfect thing that they're there for. Like if you didn't pay fees to some covered call ETF to do that for you, you would have to do it yourself. And covered calls, it's not an easy thing to to do. It's not an easy thing at all. All right. I think we finally have caught up, which means, and I'm happy and excited, we can get to the first news story. I have been wanting to show this picture all day. Actually, since Friday. This is my beaver version of Tiff Macklem. I was so impressed with this picture. I had to share it with JJ when I made it because I was just like, oh my god, this is so cool. This is so cool. Um, Now, what I did to make this picture, by the way, as you guys know, I use AI for the beavers. AI draws them. So I had AI draw the beaver, but to get my background, I had to actually pull that from an actual picture of the Bank of Canada so I could get that and pull this all together. So I was very impressed with this one. I love this picture. You'll see this picture again. This is now my official Tiff Macklem picture. So anytime I get a story on good old Tiff, we will see this picture. All right. So, as we were kind of expecting, the Bank of Canada, they cut the rate for another 25 basis points this week. So that is our third straight rate straight. That is our third straight rate cut. So it's actually interesting. The last time we had three consecutive rate cuts was that happened back in the 2008 financial crisis. Well, the cuts actually happened going into the new year, so technically 2009. But yeah, and we are expecting another two rate cuts, perhaps two more rate cuts this year. Could you imagine five straight rate cuts? That would, I don't know. I don't know if that's ever happened before. It probably has, but I don't know what the record is. Oh, now I want to know. I want to know. So this does take our rate down to 4.25%. Not too shabby. And of course, as I said before, they are signaling there are more to come. So with three cuts in the books, this is fantastic. It is going to take a lot of that interest pressure off of some of those stocks that I've been talking about for a while. So REITs, utilities, the comm stocks, yeah, and of course, it's also going to take a little bit of pressure off of everyday people as your interest rates come down, as we get deeper towards, the renewal wave has already started coming in. But those people who are still yet to come are watching this saying, oh, thank God, come on, give us another one. So that's always a good thing. And of course, people right now who are currently on variable mortgages, they are enjoying these as well. So that's not too shabby. That's not too shabby at all. Oh boy. Oh, look at this. We got ourselves a whole bunch of more comments here while I was reading the news. Vinny says, reading the next comment, you have a hard job today. Well, I'm trying to keep track. So we are at that point where I'm probably not going to show every comment. So, but I'll certainly try. I'll still certainly try. All right. Yeah, Tiff, gotta love it. All right. JJ says I'm heading offline soon to prepare for my volleyball. Well, good luck. Good luck with the game. And I might hop on again later before the live is over. Well, at this rate, we're only one news story in. We could be here till breakfast. We won't be, but it sounded funny in my head. You should do one with a pink tie too. Oh, maybe. Let's see. Your artwork with AI is amazing. Thank you. Well, AI does the work. for the most part. This one I had to do a bit more work than normal. I come up with the ideas though. And then sometimes I fight with AI to get my idea to be made, because sometimes I have an idea and AI just doesn't have that same vision. So we definitely have a conversation sometimes. Let's see. JJ says super huge margin in either direction. No, thank you for me. Fair enough. Fair enough. All right. Vineet said, wow. Let's see. Sorry, I'm just going to delete that. It doesn't really need to be addressed. All right, there we go. I don't know what was said. Yeah, that's not for me to know at this moment. Let's see here. That doesn't speak that doesn't speak too highly about where the Canadian economy is. No. I mean, there's a lot of people are worried about the economy. We already know we're in a situation where when you look at the GDP, yeah, sure, it's going up. But if you look at the GDP per capita, oh boy, no, it's continuing to go down. So we may not be in a recession, but we kind of are. Most people are feeling like they're in a personal recession. So, it's kind of the same effect. Now, our next story, and I'll go into it right away, even though I don't want to leave Tiff, because it ties into what we're talking about right now. Is, of course, we had our jobs roundup. So the job numbers dropped Friday. So unemployment, we were expecting it to stay steady at 6.4%. Well, no, it has gotten worse. So we're now at 6.6%, and this is the highest unemployment rate we've had since 2017, minus a small peak in unemployment because we sent everybody home in the pandemic. That's an exception. Now, another thing that's kind of alarming with this job report is that the amount of full-time jobs lost. We were expecting to lose about 20,000 full-time jobs. We actually lost 43.6 thousand full-time jobs. Now, we did, of course, increase our part-time jobs. We were expecting 17,000. We increased them by 65.7 thousand. So it looks like a lot of the full-time jobs that were lost split themselves up into new part-time jobs. So it's kind of this trend that I don't like. I don't like the idea. Like I hate the idea that some people are being forced to have multiple part-time jobs just to try to make ends meet. I very briefly once in my life, I tried to do a full-time job and a part-time job at the same time. And it was, it was very, very tiring. I did not enjoy that. Did not enjoy it at all. Yeah. Mind you, I was in my early 20s, but I still didn't enjoy it. Oh gosh. Now our wage increases, those are actually coming down. Our year over year went down. It was 5.2% last month. We're now down to 4.9%. So that, means that their employers are paying a little bit less when it comes to wage increases now. Now, last month, employment did rise. It rose in educational services, healthcare, and social assistance, financial insurance, real estate, rental, and leasing. It's actually makes sense with real estate because things are starting to pick up for real estate. Now, it did fall in other service categories. It also fell in professional, scientific, and technical services, utilities, and natural resources. So not too great. Now, on the U.S. side, since we're into jobs, they also had a jobs report that dropped. And in their case, unemployment held steady at 4.2. So they were actually, they anticipated it to be at 4.2, and came in at 4.2. Their actual amount of new jobs, they were anticipating 161,000. It fell short, 142,000 new jobs. Wages actually went up. So they were looking at about 3.7%, but it came in at 3.8%. And in their case, their largest job losses took place in manufacturing, where they basically lost about 24,000 positions. Retail also had some losses as well, down 11,100, and information saw an estimated 7,000 job drops. So jobs not looking good, that's for sure. Whew. And that sort of ties in. So when I was talking about, and this is why I went immediately into that job story. When I was talking about a personal recession, we got the unemployment starting to pop up. So that unemployment, it is ticking up, and we don't want to see it go much higher than it is now. This is not a good thing at all. I'm sure the government is looking at it and going, yikes. I know the Bank of Canada is looking at it and going, yikes. Some people are thinking that if the unemployment keeps going crazy, the Bank of Canada could even get into a position where they're forced to go above a 25 basis point drop. So we have to sort of look like if they start to get really aggressive with it, you can sort of see that it's probably tied into some worry on what is currently happening with the economy. So when yesterday says that doesn't speak too highly about where the Canadian economy is, 100% spot on. 100%. Okay. Ian says, do you see much more room for growth in the next year with Enbridge? Yes and no. So when we're looking at growth, here's the thing. A lot of what we're seeing and some of the positivity that we're seeing is that basically a lot of stuff is getting freed up with Enbridge because their servicing on their debts is coming down. So the rate cuts are helping them big time. There's always room for growth, but at the same time, there's a lot of people that feel that they're already overbloated, that they're already, that they're due for a correction. I don't know if I agree with that. I think there's going to be slow growth. I don't think they're going to grow. I think a lot of the growth we've already seen, I think that's going to taper a little bit, and I think they're going to slow down. I don't see them coming back down. Not yet. Not yet. I think as long as we get these rate cuts coming down, I think they're going to be fine. Now, once the rate cut cycle is done, then we could definitely be in for a little bit of a correction with some of these companies. So it's kind of one of the reasons that when it comes to riding them up, I'm looking at riding up some of these companies through to the end of the rate cut cycle and getting out and giving them a chance to settle back wherever they're going to land. And, then I can look at redeploying at that point. Bismarcky says, with the stock market behaving the way it is, starting to buy SQQ, short the NASDAQ. Well, gosh, too bad you didn't buy SQQ about a week or two ago. But yeah, I mean, I can understand some people feeling like that. Now, keep in mind, the last bear market, our last bear market started with tech. Tech led the way in there. Like tech was basically started about a month before everybody else followed. I do not think this is the same situation. So, I only brought it up because I can see how some people are kind of thinking, oh boy, this is going to happen. So be careful. I always say this, be careful, because once the elections are done, I think, you could be in trouble if you're shorting the NASDAQ at that point. So just be careful, pay attention, have an exit strategy in place, just in case, in case I'm right, opposed to a lot of the doomsayers on YouTube. Let's see. I'm personally looking at Evolve's UTS over ENB. Okay, fair enough. The it's nothing wrong with light leverage. All right. Some John Doe says, what is your take on the level of indebtedness in the US and Canada? Holy banana bread. It's like you guys are not asking the easiest questions today. It's a good question. I haven't really put a lot of thought into it. I'm going to highlight this one. So let me actually put some thought into it, and I don't want to sort of think out loud. So let me put some thought into it, and the next stream you come to, there we go. I have now did my little copy paste for it. That way there, I'll take a look at it. I'll get some answers for you. I'll give you a better idea. Right now, I don't want to answer. I don't want to answer. Jay says, I used to buy Jane's 2.5 gram cooked frozen chicken for $10 back in the day. Now it's $32. I don't see rate cuts help too much. Well, rate cuts aren't going to help with that per se. And here's the thing about inflation, and this is kind of some of the concern too with inflation. So right now, when we get inflation under control and when we get it down to 2%, doesn't mean things are going backwards. It just means that things are still going forwards, but just at a slower rate, because that's kind of the thing that you want to do. Because what happens is if we get into a deflation, so let's say, for example, you want to buy a new TV, but we're in a situation where we have deflation. Well, are you going to buy that new TV tomorrow when if you wait a month, it'll be cheaper? Well, a lot of people are going to wait a month. And then you get, then a month down the road, it's cheaper. And you're thinking, oh gosh, if I wait another month, it'll be even cheaper. So what happens is when we have a deflationary period, and this is why deflation is not a great thing. When we have a deflationary period, we do get into that situation where nobody has any desire to buy things. And it causes the economy. It causes the economy to start collapsing. So, that impacts GDP. It impacts everything right across the board. So we need to have at least a level of inflation. So that way there, if that TV today is going to be cheaper than it is in a month or a year, whatever, you've got that incentive to buy it today. So you have the incentive to spend, the incentive to keep the wheels of commerce moving, to keep the GDP growing. So that is kind of interesting. That is kind of interesting. All right. And Andrew's asking, dear Banana Bread, I looked at this in the middle of the week and I said, oh God, I got to do this. I got to do this. The only problem is I was sick most of the week. So what ended up happening is I came down with something in the week. I ended up canceling 2 streams, pushing everything. I loaded everything to the end of the week, so nothing got done. But it is top of my list, Andrew. I do apologize. I really, really wanted to get that done. I will look at that tomorrow. I'll look at that tomorrow. You know what? I will there we go. Command Shift 4. I'm just going to re-highlight this again. So this way here, I know how urgent it is. Now, I don't know if we're having a market close tomorrow, but if you guys do earn that market close for tomorrow, I will make sure I have it ready for then. But next time you're here, I will have that for you. I do apologize. Yeah, there was a lot I wanted to get done in this week, but quite literally, I spent most of Tuesday I spent in a sleep, I don't want to say a coma, but it was like a coma for me. It was a lot of sleeping, but I feel much better now. This week, definitely will get that done for you. I'll get that done. Actually, I'll get that done for you first thing in the morning when the market's open. Ian says, what percentage do you have in cash right now? I used to have a lot on hand, but I buy a lot of stocks. If we had another crash right now, I could not capitalize. Right now, my percentage of cash is probably, I don't even think it's 3%. It's about maybe between 1% and 2%. I'm not holding a pretty heavy cash position at this moment, but part of that is I don't have that bad feeling about the market overall. I have bad feelings about the economy. No lies there, but I think the market can still weather it. I think it's one of these things like every so often I think I really should increase my market position, my cash position, but right now it's not there. Right now it's not there. There's just been too many great opportunities, and I'm very happy with where things are sitting. All right. Yesterday says the problem is people buy that TV on a credit card and pay 2 times more for it by the time it's paid off. Oh God, yeah, that's another problem all there together. Yeah, it's one of these things. It's like it's very easy to buy things on credit. And it's scary if you actually were to calculate all the interest. If you're buying things on credit and you're paying it off right away, that's a different story. So, for example, using a credit card, buying things, paying it off, but you're basically milking in all kinds of cash rewards or whatever your reward system is. That's fantastic. Love it. But yeah, if you got a crappy TV and you're like, well, we could save for a new TV, or we could just throw it on the card. Well, yeah, you look at the price on that thing, and then all of a sudden you're paying like 26 or maybe more, depending on how bad your credit is. But let's say you're paying 26%. Oh, that's crazy. That's crazy. So yeah, definitely one of those things. Oh, yeah, I just it gives me bad feelings. I need a drink of coffee now. I need a drink of coffee. Ugh. Let's see. Cash is more valuable in deflation. Yes, 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 yes. Yeah. If we were in an actual deflationary period, I would move a lot more to cash, just because every week as more and more things get cheaper, your actual buying power gets higher. So it's one of those rare situations, and I'll tell you, governments hate it. If we were to start to move into a deflationary period, and that's one of the fears, that we didn't cut rates fast enough, and that could push us into a deflationary situation. If that happens, that's when you're going to start to see, like, if you start to see the Bank of Canada cutting bigger amounts than 25 basis points, that could be a factor. That could be a factor. JJ said he's going to remind me of the homework. All right. I appreciate it. I really do. So I appreciate it. Thank you. Hope you are feeling better. That's the main thing, or the May 8 and thing. We'll go with main thing. Let's see. I'm still getting 4.5% with Wealth Simple Cash. I guess I will grow that account until the rate goes down. Well, the other option too is the cash ETF. There's a couple of them, but you're going to get closer to 5% with them. Like, those rates they don't follow the interest rate pattern. They tend to stick at, as far as I know, like if you look at cash, they've been at 5 or just under 5 for a long, long time. Jay says, stick with the ETF for now. I switched all my individual stocks like Fortis and Enbridge to a less risky ETF like XDiv, which I guess both hold Fortis and Enbridge. I've been buying more ETFs as well. Yeah. And it's actually interesting. I mentioned this before over Beavis Wealth. Brandon came on and said that he's now moving to ETFs. But with him, I think it's more or less he just doesn't have the time anymore like he used to have. So that makes sense. That makes sense. I mean, I do love ETFs. I absolutely do. And I have no problem holding ETFs and having a bunch of them. 9 says, I like the cash ETFs in registered accounts. Avoid the interest being taxed. Yes, exactly. In a registered account, then you're not dealing with any of that interest. That I like. I like that a lot. All right. All right. Believe it or not, we do have more. We do have some more stories. Now, first couple stories were depressing, so I thought we'd go with something a little bit less on the depressing side. So I call this one, we're going to need a bigger mall. So on Thursday, a brand new mall opened up in Montreal called Royal Mount. So this mall, oh boy, it's a $7 billion mall. It's the most expensive one that's ever been made in Canada. It has 170 stores, and that includes 60 restaurants and or cafes. And it has a total of 800,000 square feet. It has art installations and a public park. So definitely a bit of an experience. And the interesting thing is, this is just the beginning. They do have plans to expand to add office spaces, housing, and of course, what mall wouldn't be complete without an aquarium? So they got some big plans here. Now, here's the interesting thing. most regular sized malls are actually dying. And we all know this. We know that the retail model no longer really works. Or does it? It seems like once you get big enough that things actually kind of buck that whole trend that we've been seeing with malls. So Yorkdale, for example, in Toronto, they actually broke sales records last year. There's not really many malls that are making that claim. Another mall, I guess, that is doing well is West Edmonton Mall. They have that mall has an average of 30.8 million people visiting it every year. I've been to West Edmonton Mall. It's absolutely bonkers. Um, I know that I went to the theater there once, and this is the funny thing. I had no idea. So I went to West Edmonton Mall. I'm going up the escalator into the theater. Next thing you know, I feel this heat hitting me. I'm like, what is going on? And I look up and they had this big dragon. I think they had to remove, I don't know if they had to remove the dragon, but I don't think it spits fire anymore. But it was spitting fire. I was just flabbergasted. This was the most cool thing I ever saw. But yeah, it was kind of cool. So West Edmonton Mall, that right now for me, it's the biggest mall. I have not been to Yorkdale, and I've not been to this. Well, obviously, I have not been to the new one in Montreal. So yeah, they can be a little bit of an experience. And I look at it this way. If you want to take your kids to something that's like an amusement park, maybe these big malls are not a bad option, especially as you add more and more attractions to them. Yeah, and see, and Ian is saying building a mall now is like starting a newspaper, but at the same time. And I was watching an article the other day on, I think it was YouTube. I think it came from the CBC, that some of the malls in the area in Montreal, some of the tenants have already left the malls and moved over to the new one. They're like, "Yep, your mall's a sinking ship. We're moving to this new mall." So, yeah, some malls have had to deal with a lot of stores leaving to head over to Mount Royal or Royal Mount. Ian says, I like PLZ REIT. It's a strip mall REIT. I think strip. Yeah. Yeah. I mean, it's not a bad REIT. It's definitely not a bad REIT. Strip malls have some value for convenience. Yeah, they do. I mean, strip malls are pretty awesome. And I think with PLZ, I think there's also, isn't it like grocery connected strip malls? But I could be wrong. I could be thinking of a different one. But that is absolutely not a bad place. Yeah, exactly. West Edmonton Mall is a vacation destination for people in Saskatchewan. There we go. I mean, if you're in the West and you're up near Edmonton, you gotta go. It's fantastic. I love it. Let's see. WEM is more of a tourist attraction. West Edmonton Mall is more of a tourist attraction than a retail destination. Yeah, well, I mean, they got like a beach inside the mall with a wave park. There's a pirate ship. I don't know if it was there or not. There could even be an ice rink. But I could be confusing with this mall I went to in Alabama that had well, it was actually down around Montgomery, Alabama. They had an ice rink inside a mall, and I thought that was the coolest thing. But I have a feeling that West Edmonton Mall might have one as well. Jay says, I couldn't be bothered at my local mall here in Winnipeg. Fall construction season ruins it for me. Yeah. Well, I mean, I'm living in Ottawa, and the only mall I've been into even recently is like the Rideau Center downtown. And that was just because I ended up passing through it because I got on a wrong bus after a doctor's appointment, accidentally ended up in Quebec. And I managed to find a bus that would take me to the Rideau Center from Quebec. And I got on that bus. And then at the Rideau Center, I jumped on a train. So I had to walk through it. But yeah, I didn't actually look in any of the stores. It was just more of a pass through. So just something there. Ian says, when I think strip mall, I think booze, weed, and bad food. Yeah, things Amazon has not took over yet. I don't know. I get all my cat treats from Amazon. I'm just putting that out there. West Edmonton Mall used to have submarines at the ship. Yes, it has an ice rink and an amusement park. I was pretty sure about the ice rink. All right, it was them. I get my hair cut a few times a year. Only time I go to the mall. There we go. There we go. Well, hey, why not? Why not? All right. All right. We do have more stories. I laughed when this image was made by when AI came up with this. This is what I asked for, but I found it really, really funny. So this story I call "Where Are All the Shoplifters?" Well, we had some shoplifting data that came out this week. So apparently, Nova Scotia yeah, according to Stats Canada, Nova Scotia has the most shoplifters per capita. So the report shows an increase in shoplifting across the country. So everywhere the shoplifting is up, and that makes sense. When you're in tough economic times, if people can't afford to eat bread, they're going to steal the bread. We get this. We know this. But Nova Scotia has been hit more heavily than everybody else. So there's more shoplifters. And I have the list of provinces, all 10. So I'm going to share these with you here. We'll start at 1, of course. Now, the way these are reported is these are how many cases of shoplifters were caught per 100,000 people. So with Nova Scotia, they came in at 678, meaning that out of every 100,000 Nova Scotians, 678 of them are shoplifting. So put that into now. Keep in mind too, I want to point out these are the ones that are caught. There's a lot out there that are not caught, so they're not in this data. But Nova Scotia wins the crown as the most shoplifters. Next in line is Manitoba. Manitoba, 542. So there's a lot of people, I guess, in Winnipeg that are, getting that 5-finger discount. Up next at number 3, we have British Columbia, 507. So a lot of people doing some stealing in British Columbia. Then we get Alberta, 483. That one surprised me, but I really didn't think there'd be a lot of people shoplifting in Alberta because, where where at least you get a little bit of a tax relief because you're not paying the Fed part of the GST. I thought it would have been better, but it's not. It's not. Number 5, we're heading over to the Rock. So Newfoundland at number 5 with 478. Then we get to Ian, Saskatchewan, 446. Now we're starting to get where the numbers are a little bit better. So number 7 on the list is Ontario. So in Ontario, and I thought Ontario would be higher. I really did. Per 100,000 people, 395 are shoplifting. PEI comes in at number 8, 260 people. And number 9, New Brunswick, 226. So number 10, the least shoplifters per capita is Quebec. French people are just not doing it. They're not shoplifting very much. 155 out of 100,000 Quebecers are shoplifting. So that's not too shabby. Now, I will point out, though, going back to the top of our list with Nova Scotia, some businesses are taking this very serious. Apparently, their liquor commission there, the NSLC, they're starting to add extra security. And they're putting extra searches and things like that on the ticket just to try to curb some of this shoplifting. But it's happening. And it's funny. I've seen like the amount of security and things, and I don't know. I think shoplifting would be very hard. So I don't know. I'm just surprised that people can get away with it. But maybe there's not a lot of people getting away. Maybe they're all getting caught. I don't know. Well, I guess some people have to be. Now, some people are also saying that some of the shoplifting is not just regular people, but that you've got different sort of criminal organizations that employ a bunch of shoplifters. So if that's the case, that makes me think that they probably have ways around most of the current security that are out there. So always sad to see, because as you guys know, shoplifting is another thing that it causes inflation, retail inflation. If people are stealing a good chunk of the inventory from retailers, they got to charge more to make up for that. So who's paying it? Us honest folk are paying it. Just something to keep in mind. All right. Ian said, West Edmonton Mall had more subs than the Canadian Navy at one point. Oh boy, that would be funny. That would be very, very funny. What do you think about Payfare? Let me make sure I understand what Payfare is. I think Payfare is one of these. Is it kind of one of these payment things, like sort of like a Paymo or something? I'm not 100% sure, but if it's like a Paymo, one of these things where you can sort of take your product home, pay a little bit later. I'm never a fan of these things. I've always sort of believed that, if you don't have the money for something, you really shouldn't be buying it. That's the way I'm looking at it. But let me know if I'm thinking about the right thing, Andrew. If not, this may be another highlight. We'll have to find out. Yesterday says, I hope the thefts are happening at the companies making record profits, not the mom and pops. Yeah. Well, I think it's probably harder to steal from a mom and pop shop. But at the same time, it probably still happens, unfortunately. But yeah, I'd rather see it happen to at least companies that can absorb it, opposed to companies that, are small businesses that maybe are just struggling to stay afloat. Prairie says, I had someone do a 5-finger discount in my vehicle last night. Woke up to find, oh my God, that's like terrible news. So what did they take? Were they just looking for like change or something? Or, hopefully they didn't strip stuff off your car. Jay says, Winnipeg Reddit already posted road rage video. Gotta love fall construction season. Uh-oh. Patricia's in the house. Hi, Patricia. How are you? All right. Let's see. Prairie says, Jay, which mall are you close to? I'm near KP. All right. Polo Park. Nice. Da-ba-da-ba. All right. Payfare makes it so Uber drivers and other gig workers get paid right away. Oh, that's what they, okay. Here's the thing. I don't know. I'd have to sort of look to find out exactly how much of a take they're taking. Like, if it's a situation where to be involved with Payfare means that you're losing more of your money due to fees involved with that, that would be kind of sucky. But at the same time, if you're a gig worker and Uber is your gig, getting paid right away is not a bad thing. Yeah, you know what? I'd be okay with it. I think I'd be happy with it. Other than, I guess, well, let's play the devil's advocate a little bit. If you're making your money after, let's say they pay you once a day. We'll just say once a day. Maybe they pay you after every single ride. I don't know, but that's a possibility. But even then, let's say you got paid once a day. Sometimes it can get really easy for that money to get sort of lost. Like if you're using that as a main source, like let's say if you're doing it pretty much full time, sometimes it's nice to not get paid and have it all sort of pulled together, and then you get one bigger pay. It might make it easier for people to budget and manage it properly. So, there is that possibility that money could start falling through the cracks. All right. Now they're on the TSX called Pay. Okay. Remind me that after the news and we'll bring that up, because then we can take a look at it. Pay, huh? Ian says, never had my car tossed in Moose Jaw, but I know it happens to a lot of people here. Out of my 5 cars, only 2 have locks. Oh gosh, you may want to put locks. Well, here's the thing though. You could put a lock on that car and maybe what ends up happening is that they just break your window instead to get in. Oh, okay. This sounds good. I like this. So they don't take anything. They just get paid from the transaction fees. Oh, fantastic. Fantastic. So yeah, I'm 100%. I think it's a great idea. Um, you know, as I said, for some people, managing their money could be difficult if they're getting it all the time, just sort of flowing in right away. But if you're good with your own money and you're good with managing, and you sort of realize it goes that way, and don't spend it, so that whether you can budget yourself better, then yeah, that would probably be fantastic. Terry says, mash the like button, mushroom folks. There we go. Yeah, I'll have a drink. I'll have a drink. Well, you guys all hit that like button if you haven't yet. Ah, that's good. Let's see. There we go. I did look. Okay. Muggsy says, I looked at Payfair for him a couple of weeks ago. You kind of liked it. Okay. Okay. I look at a lot of stocks. So I'm going to just this is my defense. I look at so many stocks. Sometimes I'm like, see, if I pulled it up, I probably would look at it and say, this looks very familiar. So yeah. Well, then I apparently do like it, Andrew. That's a good, thank you, Muggsy. Prairie says, CD's GPS change blanket and cushion we had over the back seat for our dog. Okay. Wow, they took a blanket for a dog. You know what? If they took a blanket and a cushion, that kind of makes me think whoever broke into your car was probably homeless. Because if they took some stuff they could perhaps pawn, but then they took a blanket and a cushion, probably because, they're probably sleeping outside. I could be wrong, but this is my hypothesis. A homeless person did this, I think. But I could be wrong. Ian says, if we had a way for people to work when they wanted and get paid cash the same day, I think there would be less crime. Yeah, I could see that. I mean, imagine if you're stuck in a position and you can just go and work for a couple of hours and have some money that you need right away for something. Because even you take it, if you can't get paid right away and you have a bill that absolutely 100% has to get paid, there's no ands, ifs, or buts about it. Maybe you will revert to crime to get some quick cash. So yeah, that makes a lot more sense. Let's see. Modern key, less entry in cars are so easy to steal, not just Hyundai and Kia problems. Okay. Yeah. I mean, the car theft thing is just crazy. I know that it has been getting better, but still, I think there's a long way for it to go. My cars are not modern. I just don't get around to fixing the door locks. Okay. Fair enough. Yeah. And Ian has always, hopefully it wasn't one of your nice cars. I think those are all in your garage anyway, but boy, yeah, that's never a good thing. All right. We do have, this one's a short story. This is a short story. All right. So we do have an update on Canadian Western Bank. So the vote was held this week at Canadian Western Bank in regards to National Bank making their purchase. So National Bank made an offer, and the bank this week voted in a large majority to accept the offer. So it was actually 99.78% in favor. So the takeover bid for National Bank is moving ahead. So the price tag, this is costing National Bank $5 billion, but it is a good move. It will open up the West for them. So now the next part is we have to wait on the regulatory approval. So that once that comes through, everything should begin happening pretty much 2025. We should see the close of this deal. So that's not too shabby. All right. Now, there's a couple comments. All right. We'll do those and then we'll get to the next story. But yeah. Ian says, you have to steal a lot of stuff to make $40. People here steal bottles and cans. Yeah, we get that here. We have, there are people who come by in trucks before the garbage people every week, and they will go through your garbage and they will actually take anything that they think they can salvage. So they pull stuff out, cans, bottles, you name it. Prairie says, Candace, a homeless person was our thinking also. The irony, they left their glass bong in one of our cup holders. Oh my gosh. No, that's funny. That's funny. Maybe you can sell it, or maybe not. I don't know. Meow says, I absolutely hate strip malls with a passion. Yeah. Yeah, I can understand that. All right. Now this is we got another news story. I actually loved I loved this image as well. So this would be my second favorite picture of the week. Here we go. We get a showdown. Panda versus beaver. So I call this one China Strikes Back. So right after we said that we were going to impose a 100% tariff on Chinese EVs, China said, "Well, wait a minute there. We have some concerns with your canola exports." So yeah, they're basically saying that they are going to launch an investigation into whether Canadian canola is harming its domestic industry by flooding the market with cheap products. They also hinted that we could be looking at some canola restrictions coming really, really soon. So it's interesting. It is interesting. Now, here is that thing. So canola, by the way, um, it is currently our top export to China. So last year we exported $3.84 billion. And yeah, and this actually isn't the first time that China has used canola as a weapon against Canada. So back in 2019, so between March of 2019 and May of 2022, they had imposed restrictions curbing our imports. And that itself, back then, that cost the industry billions. So they're looking to do that again. Yeah, not a good thing. Not a good thing at all. All right. Yeah, let me just take a look here. All right. I was just, for some reason, I had something strange written into my text. I was looking at it, I'm like, what the heck is that? But yeah, it's kind of this interesting thing. What are, you know, how far is this thing going to go between China? But, here's, and I guess this is from Canada's perspective. They said, you know what? If we lose a few billion because of canola, we're going to make up for it in all of the money that we have invested into the EV industry. So they actually look at it still as a win on the Canadian side. So perhaps not if you're a canola farmer, it may not be a win. But that's kind of the way that the government has been handling it. Nine says, I try to avoid seed oils like canola. Yeah, fair enough. I don't even know. I think most of the oil that we use here, I think most of it's olive oil. But yeah, still, nonetheless, if you are a farmer of canola, oh boy, this is perhaps not the best thing for you. All right, we got one last story. One last story for you. So, with rate cuts, we got an interesting situation here. So, a lot of mortgage lenders, they're trying to look at they're looking at your mortgage and thinking, I might be able to steal it from one of the big six. So this could be an opportunity to shop around for a better deal if your mortgage is coming up for renewal. So one of the interesting things is mortgage rates that have been advertised by the big six banks, they've come down slightly from their 2023 highs, which is what we expect because of the rate cuts. But borrowers are being offered much steeper discounts on a discretionary basis, of course. And this is the thing. So there's a couple of groups, they're mortgage lenders, one called Pine and one called Nesco. So they're actually pitching a 5-year fixed mortgage at 4.44% and the other one at 4.34%, which right now is much lower than the 5.2% average offered by the large banks. So you might be thinking, well, how can they do that? Well, they're sort of looking at the rate cuts that haven't happened yet that are about to happen. So they're saying, let's just jump the gun a little bit. We know these other rate cuts are coming. So let's start offering these mortgages. They're doing it as fixed because, that way there you won't benefit from any further drops. So they're trying to jump a couple of mortgages, basically a couple of rate hikes ahead. So this is an issue right now for the big six, but it's also time limited because as those rates come down, companies like Pine and Nesto are not going to have that room to be able to jump ahead because they're going to run out of runway. But for now, if you were looking for a fixed rate, they might be an option to look into. But yeah, I just find it interesting that they're kind of finding a way to beat the big six at their own game right now. But I don't know. If I had a mortgage renewal right now, I tell you, it would be hard. I probably would go with a variable, to be honest. I don't think I would tie myself in because there's still a lot of rate cut highway left. So, I'd be careful. Do your homework if your mortgage renewal is coming up anytime, especially within the next 6 months, because there is going to be more rate cuts. Probably there's going to be a lot of rate cuts, I think, all the way through 2025 until we get to whatever their new target is going to be. So that could be an interesting thing. All right, before we get back, just very quickly update you guys on what's going on next week. Not a lot in Canada. I mean, we do have, this is more of an interest thing. Tiff Macklem is going to be giving a speech on Tuesday, so that could be interesting. But in the U.S., we got a lot of interesting stuff coming up. We've got some more inflation data dropping. So on Wednesday, we got the CPI. Thursday, we got the PPI. So not too shabby. As we, of course, get closer to September 18th, which is that U.S. Fed rate decision. Earnings, not a lot. We got Dollarama and Empire. Those are two notable companies that we got earnings dropping for coming up this week. All right. And then crypto's been mostly sideways, so I don't really have anything in the crypto corner for you this time around. But now that we're done the news, that means I can, give me a second here. I just have to remove that. I need to go back to full screen. All right, there we go. Now we have access to everything. We have access to the big screen. So we're finished the news part. Yay! All right. Jay says, World Economic Forum is more dangerous than canola. Oh boy. NTR to maybe going to be a buy soon. So we're looking at Nutrien. All right. Hey, now that, just give me a second. All right. There we go. I'm just going to pull this up and we can actually look at stuff now. All right, NTR. So this is good old Nutrien. So they have been they've been down a little bit. They've been down a little bit. Let's give me a second here. We'll pull this up here. All right. So if you look at the last year, yeah, they have been down. Like this is low for them, $62. I still have a lot of faith in Nutrien. I think that I think they're a good long-term buy. How fast are they going to recover? That's a good question. That's a good question. I definitely, like when we go back, let's go back further. Let's go to 3 years. You can sort of see that the right now, gosh, we need to go back 5 years to find this out. Yeah, so the last time they were this low was back before, well, not before, 2020. So a little bit into the pandemic, so November 2020. So it's been a while since they have been this low. But keep in mind, we're coming up here into the Russia invasion of Ukraine. So that's part of what drove prices up. But we're also looking now at a situation where things have been coming down. But I still think that they're going to be fine long term. I can't tell you how fast they're going to recover. I don't know. But I can say that where they're at right now, I think that's a really good place to be DCAing into them and have some patience. Even if they don't go up this year, let's say they keep going down the rest of this year. If you're DCAing that way, next year, you're probably going to see a reversal on this. So not a bad place, not a bad place. Oh, and we also, I remembered Pay. So there we go, Payfair. And Yeah, we'll just I'll pull up the 1 year on them. So yeah, look at this. They have been moving in the right direction. I do like what I see there. And now we already know what they do. There was something. If I like them, there must be some good data in here. Let's take a gander. Oh yeah, look at this. They got a really good return on equity, 19.58%. Return on assets is almost up to 5, so I'm liking that. There was no debt to equity ratio, and I remember hearing that there was no debt. So I think you might have told me, Andrew, that there was no debt. So from that, yeah, I'm liking what I see. I am liking they're definitely a positive thing, and I think there's going to be more and more people getting into Uber and things like that. Especially if people are losing jobs, they got to make money somehow. So I think they're in a good position. I do like pay. I like them. There we go. Prairie says, I'd be watching it, add to my position. All right. Michael says, I see lots of lows like Oxy and many others, and I think we see August 5th lows. And are you worried about a recession? Do I worry? Like, I think that we're in, I think people, like I sort of said earlier, I think a lot of people, especially in Canada, have been experiencing like a personal recession. When you look at GDP per capita, it's been going down more than 2 quarters in a row. So it is tough. And I think whether or not the government calls a recession, and they're not going to, if they don't have to, they won't. We will have recession-like characteristics. Let's just say that. Think of it as an unnamed recession per se. So yes, are we in a recession? Yeah, from that perspective, we are. But I still think it's going to be a situation where we're going to. I just saw a comment ahead that made me laugh. I think it's interesting. Now I know with the U.S. the economy is doing better. There is slowdown in the jobs market. I don't think they're going to let a recession happen there either. If it is really starting to look bad, they have that luxury where they can drop a couple of big rate cuts right away. And a lot of people believe that first rate cut so that September 18th rate cut could be a 50 basis points one. I think they're going to start with 25, but I wouldn't be shocked if it was 50. So we'll have to sort of see about that. Oh boy, that ADF group, Drax. Drax, why do you fail me so much? All right, let's pull them up here. There's Drax group. I just want no. Okay, come on, give me the one I'm looking for. All right. Well, I'm gonna put in ADF. ADF. There we are. DRX right there. All right. This has been a company that has disappointed me. They definitely have. Now, they've disappointed me, but I'm still bullish on them. I'm going to explain. They had a really good, strong buildup. And this is when I discovered them in this buildup. And they had this massive peak. So they looked like they were doing great. Now, I'll exclude that peak, because to me, anytime you get a nice little thing like that, you can't really take that into consideration when you're looking at their overall trend. But since then, they have just been sort of drifting back down. But here's the thing, a lot of the market's been struggling. They're kind of doing that same little thing. I still feel like they're going to rebound, and I have not sold. I mean, I won't sell any of these guys. I have a feeling this is gonna rebound. It is gonna come back up. So I'm still bullish on Drax, but I can see that it's easy to it's easy to lose a little bit of hope when you see them like they keep going down and down and down. You're like, come on, turn around. I still like their fundamentals. I still believe that there's a lot more runway for this company. So let's ask me again in a couple of months. And I'm by then, if we have not, like if we once we get past that election and all of the volatility, if we are still heading down, then I'm going to start to be worried at that point. But right now, I'm not worried. Not at all. All right. So Fifey again. All right. Let's take a gander at Fifey. All right. FFIE, because you keep bringing this. Yeah, keep bringing it up. Here we go. So Faraday Future Intel Electric. All right. Let me come back here for a second. Oh, yeah, you're right. What the banana bread? That's crazy. All right. So they don't even need the 10-year. Let's come here to the 5-year. Well, we'll go to the 5-year. But look at this. They opened. So they opened July of 2021 at 161,664. Now they're worth $4.08. Could you find a better way to make money disappear? Could you find a better way to make money disappear? Like, my God, this is crazy. This is like a complete collapse. I don't even know how they're still in business, to be honest. That's just crazy. That's absolutely crazy. Let's see. Faraday Future Intellect. It's a global shared intellect mobility ecosystem poised to break the boundaries between internet, IT, creative, and auto. Breaking boundaries. Yeah, they almost broke the floor. Like, woo, bang, that's a fall. Oh boy. I'm not going to touch this one with a 10-foot pole. I'm going to put that there. Maybe Wall Street Bets will look at it and say, yeah, this is the one to pump. Maybe. It certainly has that loser flavor that they like when it comes to a stock they're going to pump. But look at this. Return on equity, negative 149.51%. Dear God. Well, on the bright side, they don't have a lot of debt. Oh, dear. Yeah, no. There's no way I would ever touch this with a 10-foot pole. But, yeah, it could be the next GameStop. You may have nailed that right there on the head. Jordan says, 20 laps to go. Can you outlast the NASCAR race this stream? I don't know. It depends. Maybe, maybe not. It's hard to say. Let's see. Michael says, have you noticed that SCVL did beat on earnings and pop every day, but finished lower than the highs of the day? I didn't actually notice it, but first of all, let's take a quick look at SCVL. All right. Shoe Carnival. Okay. All right. Let's take a gander here. All right. We'll go to the 3 months. All right. Interesting. Let's take a look at the actual earnings that you were talking about. I had to reboot my computer, so all my screens are shut down, so that's fine. We'll bring up Trading View. All right, and we're going to look for our shoe company again, SCVL. Here we go. Shoe Carnival. Let's add it. All right. You can go away now. There we go. Here we go. SCVL. All right. I want the full chart. All right. So here's their earnings. Well, no, they did okay. Look at this. Yeah, so they did well on their earnings. Let's see. They beat their earnings per share by 2.47%, and they beat their revenue by 0.37%. Now, going into those earnings, like, look at this. The day before earnings, they were at 37.55. Now, they did make it all the way up to 43.25. Then they came down a little bit during that. And this is what hour. So yeah, they've come down a little bit. But here's the thing, even though they finished the day at 40.47, the day before earnings, they were like at 37. So they did fine. They did fine. And this will happen when somebody does well on an earnings, and you'll see this gap here. That's all part of that. You can almost call that part of that green candle if you really, it's just that happened overnight, that gap there. So it opened here. So think of that as your overnight action where there's nothing. Then they exploded. That will happen. A company will explode, and then it will normally, basically it'll correct a little bit. And that's what's happened here. But you don't compare that with the bottom of this. You compare that with this because that's the day before. So yeah, they've done fantastic. I think it's a good earnings. This reflects a good earnings. It's not up and then keep going up. It's just a little bit of a correction. It looks like they had a correction, and it seems to be that they've actually, if you're, we don't have enough data points, but if we were looking at a trend, you kind of got a little bit of they were almost starting to build up a resistance, like a support here. So that might turn out to be a support level because it's already come down, tested. It's come down and tested. And you can see, and this is why I say that it's acting as a support. You'll see that little wick on the bottom of that candle. Well, that shows at the end of the day, there was pressure to go back up. So that could be a support that's developing. That might, I'd like to see I'd like to see it bounce one more time off of it before I would officially call it a support, but we've at least seen 2 bounces off of it. So, and I don't count both of these two together because technically that's the bounce off of it. This one may have wicked down a little bit towards it, but it's not really, to me, I need to see it go up and then back type thing for me to call it a bounce. So that's not too shabby, not too shabby. Let's see. Then Gap. I think they beat on earnings this past week and selling off, and where you can decide to buy. Okay, there we go. You mentioned the Gap there. Yeah. See, it's because I should have read ahead. I should have read ahead. What do you think about BNS? I like BNS. Yeah. We'll pull BNS up. So Scotiabank. All right. Now they had a mixed bag with earnings, but I still like them overall. And let's see, you can sort of see here on the last 5 days, they've mostly moved up. But I mean, if you look at them for the last year, since they've come down, they have been mostly moving up. So I think they've had some very healthy growth. Now, I did hear, because I know that we were expecting dividends again, but apparently they had spoke out and said that really wasn't a concern. Their thoughts are pretty much towards the U.S. They're looking at moving into the U.S., and that's very, very cool. Okay. Let's see here. Sorry, I was reading this thing here from Michael. So Fifi, I think, has done so many stock splits like reverse, and I say stay away and don't think about this. Yeah, that's probably true. If you go to Yahoo, just in case you're ever wondering, you can go to Yahoo Finance. All right, and if you go to a company like Fifi, for example, FFIE, here we go. All right, statistics. All right, they will give you a little bit on some of some of their splits. So their last split happened in August of 14th, and that was a 1-40. So, when you look at, and this does make sense if you think about it. If they did a 1-40, that means right there, that price is divided by 40 right there. So if you had a lot of stock splits in there, that sort of makes it a little bit, makes it a lot different than falling from, 160,000 straight down to 2. It means that, they fell from a lower level, depending on how many. Now, this only shows me the last one. I might be able to get more on Simply. I kind of want to know now. Let's try this. I don't know if Simply will give me that information. It might. Let's see here. PFFE. Whoops. Where am I going now? It's like FFIE. All right, let's see here. Highly volatile. Does not have a meaningful market cap. Of course. Of course. Oh boy. Let's see here. Whoops. What did that? Oh, I just jumped to the wrong page here. All right, let me see. Okay. Insider trading. There's nothing there. Yeah, no, it's not giving me. It's not giving me all. It's not giving me any of them. I could have swore that there was something in here that sometimes showed me some, but no. I guess all we have is what we have from that Yahoo Finance. So interesting, but I'm sure there's ways. Probably could ask ChatGPT and find out. So kind of interesting. Nike stock. Woof. I do. I like. I've actually. Somebody asked this week, probably, I don't know, maybe 4 or 5 months ago, they were down on Nike, and I was like, I wouldn't count Nike out. I wouldn't count them out. So they have. Let's pull this up here. They've done what I sort of expected. I expected Nike to bounce back, and not because their soles are very rubbery, but just because they have they're blue chip. They have the fundamentals. All right, so let's pull it back here so you can sort of see. They had a rough year. Then they had this drop. This is where everybody was at the point where they're like, it's time to get out of Nike. It's time. But no, not really. As you can sort of see, they have begun. And I still have full confidence in Nike. I think Nike will do fine. Now mind you, if the whole market completely craps over the next couple of months, well, Nike will too. Most stocks will. There are some stocks, though, that perhaps may do okay. So that's kind of interesting. Actually, the video coming out on Tuesday, that is a 5 total return stocks that do better in volatile times. So I got some good stocks. I got some good stocks in that one. So definitely check that out. All right, guys, we're coming up towards the end. If you got last minute questions, drop them in the chat. And keep in mind, I always tell you guys this. Last minute questions can sometimes go an hour. If it's all up to you guys. I'm just along for the ride. So drop those in. I'm gonna have a drink of coffee while you guys do that. Oh dear, they're very good. I do like that. Let's see. Buffett even buys so many shares higher than Friday close, and when Oxy report earnings was a big beat on more oil. Yeah, I mean, here's the thing with oil. Yes, oil prices are coming down because there is an oversupply right now, but we have winter coming. Winter is going to help alleviate that oversupply. That's a no-brainer right there, especially if we do get production cuts from OPEC, and they have been talking about that. That's going to help firm up oil as well. And that's good for a lot of oil companies. And, you got to look at what Buffett is doing. I mean, this is a guy, he's been around for he's been around for 94 years. So he kind of got a good idea what he's doing. There are definitely oil companies out there that I think are very, very much worth looking into. In fact, as a preview for tomorrow's, well, I guess not tomorrow's. If you're a channel member, you do get to see it tomorrow because they get to see videos one day early. Tuesday's video, I will tell you this: there's at least one big oil company in my list. So, as you're watching it, because it's not the first one. So as you're watching it, you'll be like, what is it? What is it? What is it? Is it Torlamine? I'm not going to verify yes or no, but I think it's good. Let's see here. 9 says, I'm glad I got out of ZWC at a profit. It was the worst covered call ETF I own. All right, ZWC. Well, let's take a look at this bad ETF. ZWC. So this here is this here is the BMO Canadian High Dividend Covered Call ETF. All right, and let's go back here. It's moving up, so you do get some total return. That's good. That's good. But it is kind of a smaller yield on that side, so 6.897%. So there are other covered calls doing this exact same thing that basically do a little bit better. Now, this here is 100% Canadian. That might be one idea, because you take another, you can take like an S&P 500 one and probably still do better. But yeah, no, absolutely fair. Fair enough. Let's see here. Buffett sold BAC, lots of shares. Oh, all right. BAC, Bank of America. Here we go. Now, yeah, it's kind of that thing too. With a financial, you see, it's kind of interesting. This is the difference between Canada and the US. When it comes to the banking system, so American banks, their foundation is sort of set up a lot differently than Canadian banks. So Canadian banks are based off of, actually, they're based off of Scottish banks. So when the initial settlers in Canada started to bring banks over, they basically just said, well, let's make them like back home. And there were a lot of Scottish people. So, and it's kind of interesting. Part of what some of the differences is, you guys may, if you're old enough and you remember far enough back, a lot of our banks had their own money systems in the past. So you used to be able to go to the Bank of Nova Scotia and buy Bank of Nova Scotia money. That used to be a thing. But the big thing is because it's based on that Scottish thing, and it sort of creates this level of stability in it. Now, it's also the same reason why it's very hard for other banks to survive in Canada, if they're outside of the system that we have with the Big Six. What is good with this system is that it makes them very resilient. So our banking system is tough. It's tougher than most people realize. If you look towards the past, you will see it's very rare for a Canadian bank to go under. It's rare. It has happened to a couple of smaller banks, but it's nothing like compared to the US financial system. The US financial system, it's not based on the Scottish system, and there is more volatility in it. So there is a bigger chance that you can see, especially smaller regional banks, it's easier for them to fail than for a Canadian bank. So going back to Warren Buffett, him pulling out of something like Bank of America, keep in mind too, it doesn't mean that he thinks Bank of America is going to fail. It just means that if he's pulled money out of it, he's either one, he's just thinking he wants to sit on a cash position in case the economy does get worse, buy back in at a later date at a lower price, or he has another asset he's thinking of moving funds into that he perhaps wants instead of Bank of America, something that will give him a better return. So it's going to be one of those. We won't know until, he will eventually publish why he's done everything. That's the beautiful thing about Warren Buffett is we do learn eventually why he's made these moves. But the internet will speculate like crazy over every move that he's made, and try to come up with, oh my God, does it mean that the sky is falling? He sold more Apple. We better all sell Apple. Well, no, you don't need to all sell Apple. You just have to sort of take it with a grain of salt. It'll be fine. It'll be fine. Let's see here. I love oil. Is it BP? Oh, I don't know. Let's see. China has a bubble, I think, in banks and in bad shape. And can it spread around the world? Yeah, it could. I mean, when you're looking, like, let's just say, for example, I mean, if you were to have a complete breakdown in the Chinese financial system, Not to say that that's going to happen. It's probably not. But if you had a complete breakdown, there would be ramifications worldwide. I mean, the same thing. It's like if the American system were to completely collapse, once that would have even bigger ramifications worldwide because the American dollar, where so many countries use it for trade. Um, so yeah, we don't want to see. We don't want to see. I don't want to see China fail. I don't want to see the. I don't want to see. Definitely don't want to see the U.S. fail. Um, all of it has. Yeah, all of it has a lot of ramifications. I think right across the board. Jay says, my aunt trade with BAC. I'm jealous. We can't have those low fees in Canada. Yeah. Well, I mean, you can. I mean, you look at some of the smaller banks. Things like EQ Bank have a lot less fees, but you also, you're also trading away. So when you leave, for example, a big six bank, you are trading away some stuff. Like, for example, you're not going to be able to survive alone on EQ Bank yet, though they do keep adding stuff. So, you end up in a situation where you might need EQ Bank plus, another option as well to sort of make up for everything that the bank has. So, we gotta see it. Uh-oh. Oh, this is great. You did it, Candace. The race is over. You win. Nice. Do I get a trophy? Do I get a trophy? I would like a trophy. I don't know. I'm just saying. There we go. I outstreamed a NASCAR race. So I guess my mouth is faster than a roaring sports car. Oh dear. That almost sounds like an insult, but we'll take it. We'll take it. All right, everybody. I think we've hit the end. I'm good. I'm feeling good. I think we covered everything we need to. We did not get a stream for tomorrow, but we will be back on Wednesday. No problems there. Look forward to a market close Wednesday. Let's hope we get some better. Get a little bit less red in the market. I wouldn't mind just a nice calm week. That would be fantastic. However, folks, because we got CPI and PPI, and even though the Fed said that, they're not really looking at that as much because they think they got inflation moving the way they want it, we'll have to expect still a little bit of panic. Hopefully not as bad as before. So there could be some volatility before Wednesday. The PPI, I don't think is going to impact things as much, but people I think are still going to be a little bit fearful of that CPI. I actually think it will be moving in the right direction. I don't think it's going to be a big issue, but there could be a little bit of panic in the market. So you might see a little bit of red. So what we might see, and you guys can call me on this. Call me on this next week. I'm going to say Monday, we're going to have a slight green day. Not a strong green day, but a slight. Then on Tuesday, I think we're going to have a red day. On Wednesday, I think we're going to start red, finish green. Thursday, I think it's going to be very flat. I think it'll be either a little bit red or a little bit green. And then Friday, I think we'll have a little bit of a green day. So I think it'll be a calm week overall. But yeah, remember what I said. Call me on it for sure, because I'll probably forget what I said. And then we'll see. We'll check it out next week. We'll see how that goes. So, a glass pendant. That sounds exciting. That sounds actually quite exciting, Jordan. Okay, I will do that. Muggsy says, thank you for a great stream. Oh, I mean, this is what I'm here for, right? These are always a lot of fun. Like, we've been doing this for 2 hours and 24 minutes. It doesn't feel like even a minute beyond 2 hours, to be honest. Let's see. Michael says, I noticed food companies going higher. I think the food companies are always a good buy. Like, they're never going to run out of business because, well, not unless people stop eating. Great show, Mountain Investments. Thank you as always. Mountain Finance, not investments per se, but that would have been a good name as well. Prairie says, have a great weekend, everyone. And Michael says, the reason the market sold off hard on Tuesday was because of Sunday data on China. Good old China. All right, everybody. I think we've hit the end of the road. Have a fantastic rest of weekend. Hopefully, your investments treat you well tomorrow. And I will see you guys again soon. Take care, everybody. Bye bye.